Good morning, it's Larry McMillan once again with the stock market update on Monday, October 13th. So on Friday, we had a big down day when tariffs were threatened against China. Then over the weekend, it was sort of, oh, just kidding. So the market's back up again today, and it really has thrown a lot of the indicators into sort of disarray. One thing I can say, though, is that we should be embarking on a period of greater volatility. So we are recommending straddle buys in that case because we could go up from here. There's really that's certainly possible, but we are starting to see some sell signals. So let's review the individual things. The S&P sold off strongly on Friday and even sold off further after the close. But it really went right down into the support area between 6,500 and 6,550. So now that we've rallied today off that area, that is even stronger support. So if we were to break 6,500, that would be very negative. But right now, it looks like that is the area that traders are willing to buy in, or even institutions. And so the S&P chart remains positive, and that is really the most important indicator. Put-call ratios are mixed. They rolled over a little bit on Friday because of the heavy put buying that accompanied the market sell-off. We'll see if they can continue to rise from here. If that were the case, that would be a sell signal. We did get a McMillan volatility band sell signal on Friday early in the day, so that's kind of about unchanged right now. The breadth of the market was terrible on Friday, and it has been recently anyways. So the breadth oscillators remain on sell signals, but they have finally moved into oversold territory. That's the first thing that we have that's oversold, and therefore breadth can improve over the next, say, week or so. Then that would generate a buy signal. Meanwhile, new highs versus new lows. For the first time in a while on Friday, new lows outnumbered new highs. So that buy signal is in jeopardy. Right now, it's still technically in effect. But if new lows outnumber new highs again today, Monday, October 13th, then that would terminate that buy signal. It's not a sell signal, it just ends the buy signal. Realized volatility exploded, and that generated a new sell signal as well. The 20-day historical volatility of SPX has now jumped back up to 12% from its low of 6%. So when volatility is increasing, that's generally not a good thing for the market. Implied volatility, VIX, that also rose on Friday, but it's slipping back a little bit today. And the two signals there are in flux right now. It's too soon to tell. But if VIX closes above 1940 again today, that would terminate the trend of VIX buy signal as a buy signal for the stock market. Would terminate that, but again, it would not be a sell signal. Finally, the construct of volatility derivatives, the term structure, that's remained pretty bullish throughout. So overall, we have a positive S&P chart, a lot of other indicators of influx with potential sell signals arising. And then we have the positive term structure of the futures, so VIX futures. So it's still slightly bullish, but I do think we're entering a period of high volatility, at least for a while, probably maybe even until late December. So we'll just have to see. And of course, if you're interested in trading off of that, you would buy straddles on the index or on an ETF that represents the index. Meanwhile, since things are changing so quickly, I advise you to, or invite you, maybe advise, to visit our website and take a look at our daily letters where we keep up to these things on a daily basis. Meanwhile, have a great week trading.